Hi, everyone. I'm Rick Bensignor. Today is Tuesday, May 18th, and welcome to this week's In the No Trader Show. What we've got on the agenda for this week, we're going to start with a market overview. We're going to take a look at Cathie Wood's ARK Investments ETF, which has been a benchmark to many people in the technology area. And we'll take a look at what we see, especially using DeMark charts, and the potential turnaround that we've seen, at least on a short-term basis, and how we hit the target we expected. We will take a look at the U.S. 10-year that has been meandering for quite some time and tell you if we see anything different on it. The dollar index has been selling off as of recent, and not that far away from the lows of 2021. So we will take a look at that. And then we'll take a look at the gold futures chart, and that'll kind of lead into what we're going to do after that, which is in our sector analysis this week. We'll look at the major gold and silver equity names I took them from the XAU index, the Philadelphia Gold and Silver Index. So we're going to get through about 10 names or so that are prominent gold and silver names. So let's just talk about the markets in general before we get to the charts. Last week, we saw a strong sell-off at the beginning of the week that then had a very strong turnaround towards the end of the week, surprising some people just how much bullishness came back into the market. And when all was said and done, if I remember correctly, the S&P closed at, I think it was 4174, which put it just a couple percent from all-time highs. NASDAQ was certainly a little weaker because of its recent weakness, and the Dow was also close to all-time highs. So despite all the market movement that we've seen recently, you still have pretty solid equity markets that are certainly only a few percent away from all-time highs, and no destruction of any real kind was done on that sell-off. It was sharp, it was vicious. If you're a short-term trader, you probably did well in both potentially having shorted the market early last week and bought back on some of that rally. If you were a swing trader, my guess is you probably got hurt a little bit more because you tend to hold for a few weeks, and movements like that easily could have stopped you out on the downside, and maybe even sold into it too early. And if you're a long-term investor, as much of Wall Street is, it was basically a non-event. And that's probably the most important thing to think about as you are thinking about what's going on in the markets, is that for the bulk of portfolio managers who are longer term, whether they're mutual fund portfolio managers or just longer term investors, and that includes, you have to remember too, that includes a lot of hedge funds. It's not like it was 10 and 20 years ago where the hedge funds were all short-term traders. Many hedge funds have mandates, and they're much more significant longer-term trade investors. They're not in and out quickly. You know, there's certainly still those who do that, but that is not the bulk of the investing public at this point. And you have to remember that even a few percent sell-off is not going to have people who are invested for the long haul making any major strategic shifts in their portfolios. So by and large, things still are holding up well. We certainly could go into somewhat of a sideways pattern for a while. We don't necessarily have to go and plow to new highs right away like we have done so many times this year. But put the sell-off in perspective, that by and large, there was not a lot of technical damage done in the bulk of the market, but certainly some of the tech arena has seen some very severe technical damage, especially in the SPAC space and things like that. All right, let's take a look at charts. Let's get started with ARK. So we will start with this chart. So here is a weekly chart of Cathie Wood's ARK Innovations Fund. And you can see that on all-time highs, we had an aggressive TD combo, upside exhaustion signal, You would not have necessarily sold it on that, but certainly the week after would have given you the signal. And, we had a target of 98.20, the low of the move in this. And I write about Kathy Wood's ARK, this ARKK, every week in my institutional review for clients, and my newsletter, it comes out to them every Sunday night. 98.20, the low of the move was 97.22, pretty good downside target. And we said that we expected a short-term bounce. This move may not be over to the downside, but certainly we hit this target, which has been in place since November. And this dotted red line here, and that was the downside target. And, you're seeing some strength this week. First resistance, actually, we're stalling right near first resistance. If it gets just above, closes this Friday just above, let's see if we get this price here, 106.94, and opens higher next Monday and has a higher high next week than this week, and closes above this week's close, all those things happen next week, then you've got a bullish turnaround with a target up at 116 and change as an initial target, and a secondary target at 136 and change. So this was certainly an important short-term bottom. It did hold the cloud. Let's see if we put up a 200-week, how that did, way beneath. So not relevant. Let's look. I'll just switch this to a daily for a second. The daily also had a 13 signal last week. At the same time, we hit that 98.20 level. In fact, it happened on the day that made the low. So that's why we have a trading bounce here. Notice the daily chart also had a 13 on the all-time high, as did the weekly. This, folks, is why we use DeMark models as part of our analysis. It is quite a, there's a learning curve to understanding how to use these, and you don't blindly just look for 13s and play them. But this is, why I pay for the software, incorporate it into my process, and have for 25 years now. In fact, now that I think about it, June will be exactly 25 years since I started using DeMark models. And that probably puts me as one of the longest running people on all of Wall Street who is still in the business, who has used and mastered the DeMark models. So that's to take a look at Kathy Wood's ARK Innovation Fund, and why we think short term there was a trading bounce coming from that 98.20 level. Next, let's take a look at the US 10-year. It hasn't really done all that much recently. So since peaking on sequential 13 signals, both standard sequential and aggressive sequential on the day that made the high of the move, we have kind of pulled back. We have a little trend line that's still active. Every time we start a count in either direction, I remember we were on a 5 down. Here, it disappeared. We got to a 5 up last week. That has disappeared. In my view, there is virtually nothing to do in the bond, and when I say the bond market, I'm talking about the US 10-year right now. So the closest way to trade that is the ETF IEF, which is the Lehman 7 to 10-year bond index that is probably the closest match to anything that tracks the US 10-year. So there's really virtually nothing to do right now, and that is why I have not had clients do anything in quite some time. So we still have a long-term, an important target this year up at 1.85 in the 10-year that we've had since before the, going into 2021. That was our big upside target. We got close. I think what's the high here? 176 or so. Yeah, 176 and a half. So we got about 10 basis points away, and I don't know if it's going to happen. I would love if rates fell down below 130. On some other charts, I start getting some important support. In fact, let's see where the cloud is at this point. Okay, so the bottom of the cloud, well, starts moving up, and I'm just curious. So let's move this into a weekly. Yeah, So, you know, if we were to get a chance to get the baselines to move down here, I'd love it, in order to sell bonds at a much better price than where they are now. But you can see, you know, the trend line off the bottom is still holding. And we've just simply consolidated since we got the weekly 13. The weekly TDST line is at 1.858. And again, that was our key target for the upside for the year. Alrighty, what did we say after that? We said, let's see, I don't recall. So let's go back. What did I say? Dollar index and then gold futures. Okay, so let's move on to the dollar. So here's the dollar index, and it's really at critical levels right now. And the reason why is because we've got side-by-side weekly 13 signals that are somewhat spread out, both to start the year, and you'll recall we bought the dollar here saying everybody was way too bearish, and we sold it out at 92.90 right here. So we took out 95% of the up move, and then we've been watching since. We had a quick long that we got stopped out of. And now we have a 13 again on the weekly. And why is this really important? Well, on its own, 13s are always something to look at. But go back to 2018, aggressive sequential downside exhaustion, followed a month and a half later by a standard sequential in red. Same thing here now. Aggressive sequential bottom, good move up, now down to the standard sequential. So dollar's at an important, potentially important inflection point. Weekly MACD has just gone negative by a tad here, depending upon probably how this week ends, whether or not this sticks there or not. But we could still slide down to what was my secondary target of the year, which is 87.41, which is a risk level. Let me see, what is this from? No, that's a full propulsion exhaustion level. From a move that started from the down move that started off of last year's high. So that said, we could get all the way down to 87.40-ish round numbers. So I'm going to watch the dollar here. I probably will not buy it initially, especially because I would probably want to see a weekly close that's above the close from 4 weeks back in order to confirm this 13. But I have a feeling that we could still see more weakness, take out or certainly challenge again these 2018 lows and even exceed them to the downside, down to the 87.5-ish level. So that's what I'm thinking about in the dollar. And of course, dollar weakness is almost always good for the gold market. So let's take a look at what's going on in gold. And gold has had a very good run recently. And so here's gold futures. So setup 9 called the top, setup 9 called the bottom. And the question is this setup 9 going to be another top? And what I wrote to institutional clients this week is that gold is going to be up against very shortly some very significant resistance. So it is not only the downtrend line from all-time highs, but there's an upside full propulsion exhaustion level at 1873. What's this week's high? 1876. So we've hit our objectives here, and we're again on a 9 setup. And we know 9 setups often can turn the market, similar to what 13s can do. But there are different rules and different ways of understanding them. So to me, gold is really on a key level here that it needs to surge through to completely put bulls back into control. Otherwise, you know, they've been short-term pushing things higher. We got clients long down here. In fact, we said anywhere from 1710 to 1640 is where long-term investors should get into gold. The low of the move was 1673. We perfectly, you know, put on positions into this. And the question is, do we take a little bit off here? And my guess is yes, you should. It's just smart. We can always put it back on. But, you know, look, this is a key inflection point for gold in the bigger sense. And, you know, that's the way I'm looking at gold. And because gold is so important to people's, now here, I'm going to put this in a little bit, especially as cryptos have crept into the vernacular of people's investment talk. Everybody should have 3 to 5% of their portfolio in gold. I cannot necessarily tell you that you want to have 5% of your portfolio in cryptos. You may want to put, I don't know, 2 or 3% in, not more, because that 2 or 3% could potentially turn to nothing. I don't know if it will. Of course, that 2 or 3% could turn into 6 or 9% of your portfolio if cryptos, continue doubling and tripling, and as they have. That's a choice you have to decide upon, but you do want to have gold in your portfolio. And if we break out to the upside here now, I think that increases chances that we can test that August 2020 high, just over $2,050. And it's something that you've probably heard for years and years, and for a long time gold did nothing. And then since 2000, gold has performed very well. If I turn this into here, let's just make this a monthly chart. So let's go back in time. Look at that, 13 on July of last year. So here's this is just about 2000, goes back to 2003. You can see gold, it has really now easy to say that we have. Now let's make this just a simple trend line that goes straight across. Now, certainly gold may have a long-term double top. That is possible. But the decline got very close to the propulsion exhaustion level off of this down move. You can see that this month we have a setup, an upward setup, right? We close above the close from 4 bars back, 1, 2, 3, 4. So as long as this month, the month of May, goes out above 1550, you've got at least some potential strength here and the beginnings of a further move. But when I look at this, all in all, it says to me, yeah, probably makes sense to lighten up a little. So that's off of gold futures. Let's go take a look at now what a bunch of major gold and silver stocks look like. And we're not going to look long-term like this. We're going to look shorter term. So let me turn this into, there we go. All right, so switching from the gold chart, let's take a look at now Newmont Mining. We'll start getting into some of these equity names. And we'll switch it to a weekly chart. All right, so we see that Newmont is on the highest level in years. We had a 13 signal here for some upside exhaustion. Propulsion level also caught the high. We've got some resistance to deal with in between about 72.40 up to 75.11. This week's high, 74.69. What is this line that we're talking about? It's the stop out from this 13. In other words, if we properly get above this level, it says this exhaustion signal is no longer valid. At this point, it's a year old. It did its job of exhausting the uptrend. We went sideways for an entire year. So yeah, it still has some meaning, but what this really says to me is that Newmont has target up at 92.40 if it breaks out. So if you look at some of the relative lows and even use the 50-week moving average as a potential stop out, it still makes sense that once we break out above 75, this has a run to 92. So kind of like that on the breakout, looks solid to me. Let's look at ticker GOLD, Barrick Gold. You can see it's much weaker. It is not on the best levels of the last year, the way Newmont is. We're well off those highs. In fact, let's see if we take a trend line, what this needs to do. All right, so we still have some room up to a little over 26. We're also on a weekly setup 9. So potential pause in here. If we pull back to 22-ish, I'm all in. I'll play the uptrend. I'll still say, this will ultimately go higher. But Newmont is certainly has better relative performance than GOLD. So that's the better of the two names. Let's move on to Wheaton. WPM. Similar look to what we just looked at in Barrick. Now, at least this has broken out above its downtrend line. Barrick had not, so that puts Barrick in third place of the three names we look at. Still set up 9, but I like that we've broken the uptrend. MACD is solid. It looks like it's, widening. So I would say that this has a very good chance of targeting, the highs, 54.5-ish. And on a real breakout, you've got some minor targets up here at 65, 68.5, and up at 74 and change. So again, this is better than Barrick, and Newmont is probably the best of the three. Let's look at Agnico Eagle. So similar look here. Has broken out of the downtrend, but a 9 count, so certainly some pause. Pulls back to 65-ish, willing to come in. Targets at 83.78 or so, and then way up at 112. So all these names are showing that you have higher lows this year than last year. Certainly they all have, I haven't even drawn them, but they all have uptrend lines that we can deal with too. So similar to gold futures, you may get a pause in here on these ones that have 9 counts, but I'd still buy weakness, thinking that this is going to eventually, gold is still going to really perform and make its way higher. Let's look at Anglo. So here's Anglo Gold, and this is a different look than any of the ones we've looked at. Very sharp downtrend line that I wouldn't even say is worth doing. But from this perspective, it's got multiple bottoms down at $20 recently. We're already at 25, so in percentage terms, it's moved up a fair amount. It's not on a 9 count. MACD is starting to pick up towards the upside. It's got targets at 26 and 32 over time, but this is so far off its highs that not one that I'm interested in compared to the other ones we've looked at. Now let's take a look at one of the more popular silver names. And it's Pan American, PAAS. So Pan American also interesting. More here, I'll kind of draw this the way my eyes see it, which is pretty much like a simple rectangle. And this is in a trading range. It's got no signals per se on the highs, got no 9 counts or anything on the lows. It's really just a trading range that it's in the middle of the trading range. Hasn't gotten the kick up to the upside that you'd really want to see. So this one, the only thing I'm looking at is held 50-week moving average, holding 50-week moving average. All these are getting some bids, even though we've been below, recently. But you can see, compared to other ones, there's no real, I can draw an uptrend line, but this uptrend line you would have redrawn 16 times because by going sideways, you just constantly keep drawing uptrend lines, and you don't know, at one point, this was your uptrend line, and then that broke, so you had to redraw it, and you took this as your uptrend line, and then that broke, so you had to do it again. And the reality is that when you're in a sideways pattern like this, you really don't know which one's going to be the right one until down the road, when we finally take out these highs and the lowest low is the one that's going to be the right one. So all these are kind of mishmash, nothing worthwhile at this point. Still in a sideways range. MACD telling you that, there's a stall here too. There is no sense like the other ones we've seen where MACD really has turned bullish. So Pan American has really not done much for you. Unless you've, in the last 6 months, just simply traded, the range from 28 to 35, which in percentage terms, again, is 25%. It's good, but there's no pattern in here to really figure out what to do. Probably if we took this down to a daily chart and you looked at RSIs or something like that, you may be able to time out overboughts and oversolds. But in the bigger picture, nothing to do here yet. Let's Move on to Hecla Mining HL, breaking out to the upside. This one has taken out this high. Oops, let's go straight across. And these highs, so on spikes, except this week we're up here, which is very good news. So this is a good name. Upside target somewhere just around 10 now. And then over time, you know, if we look at something like where that 13 was and these highs from these 13 to this 13 in here, you can see higher targets. So this is a real breakout. Plus, it shows you that there really should be good support at around $7 on any pullback. So this is a name I like, one of the better ones. Let's move on to Harmony, HMY. Okay, now this is starting to build too. Nice long multi-year rounding bottom. Hasn't broken out yet, still kind of off its highs. Let's actually, I'm gonna do two things. One is let's go up here and see where that comes into play. Okay, so that actually, interestingly, is near the upside propulsion target, near 667. So the trend line is something that we'll deal with, but that's $1.50 or no, a little over $1 higher than where we are now. So in percentage terms, that's almost 20%. We're above our propulsion breakout level here of 521. I like this. I like the spread between the 50-week and the 200-week here. So this base, this may not be an instant winner, but this is one of the better names to look at. And we're going to finish up with Alamos, which happens to be a name I own. Got into quite some time ago. And had a deal recently, you know, with some of this decline. But this has broken out of any of those downtrend lines, starting to look better here. MACD working, you know, in a better way for us. So I'd love to see this ramp up, pretty much take out, you know, highs from back there in 2014. And if it does, this really has some room to go. So that's it for this week. Pretty much a good look into the gold and silver market and what was going on with Cathie Wood's ARK Fund. And we'll be back next week. I'm Rick Bensignor. This has been In the Know Trader.